Hey Internet, Dave Noyes here from the home office today. So we've just ended January, and I wanted to talk to you a little bit about interest rates and where they might be headed this year, but almost more importantly, how you can predict or how you know where the average interest rate is right now. So I'll give you a few insider secrets. Hold on a second. All right. At the beginning of the year, interest rates were at about 3.22% for a 30-year fixed mortgage. And of course, this varies a little bit depending on region and your particular credit picture, but about 3.22% is where we saw the 30-year fixed rate mortgage. And actually, by the end of January, just a couple of weeks ago, it had gone up to 3.55%. Interest rates are inching up just a little bit. And let me tell you this. The other thing about interest rates, you hear that the Fed is getting ready to raise interest rates. Really, mortgage rates are not tied to the central bank or the Fed interest rate, which is the interest rate that banks charge each other. What it is more closely tied to is the 10-year treasury note. So when you are looking to see where interest rates are headed, follow the 10-year treasury note. And that usually comes out in the financials, every day if you look it up. And you can Google search all these things. And here's another little insider secret. For the past 50 years, the mortgage rates have followed the trend line for that treasury note. But look for about a 1.7% spread for 30-year mortgages. It's usually about 1.7% more than the 10-year treasury yield. Okay. One other thing I'd like to add about interest rates is, how the rate affects the payment on your home. And I'm going to look away again here at a chart I have. And this is on my blog. If you go to davenoyes.com/blog, or just go to davenoyes.com and click on the blog button, you'll be able to see the graphs and charts that I have that are not boring to look at, believe it or not. But let's say you're looking at a home in the $400,000 range, which is not too far from the average in Buncombe County or Henderson County for that matter. At 3.25%, which we were just a little lower than that at the very beginning of the year, $400,000 home, 30-year fixed rate, 3.25%, let's just say for argument's sake, $400,000 home, your payment, principal and interest, would be $1,741. If we look at, let's just say at the end of the year, we go up to 3.75% interest. So that's just half a percentage of interest. We're looking at a payment of $1,852. So it's about a $110 difference. So you can see what a difference that makes, and the amount of interest you pay over 30 years. Of course, that's just, if you're in your home for 30 years, that's a lot of money. But as we all know, and we've seen over the last several years, interest rates fluctuate, and there's nothing wrong with refinancing to take advantage of a lower interest rate when they dip down. So there you have it. There is your interest rate primer. Just because I said 3.75% doesn't mean I'm guessing that interest rates will go that high by the end of the year. You just never know. What affects interest rates? Primarily the 10-year treasury note, the yield on the 10-year treasury note. There is that, on average, about a 1.7% spread. So if you take that 10-year treasury note, add 1.7% to it, then you'll have an idea of where the current 30-year fixed is. And I always recommend a fixed rate if you're going to be in your house for more than just a few years. If you're looking for more information, if you want to see all the graphs and charts I have, just go to my blog. If you have questions, just feel free to contact me. You can contact me. My information is around this video someplace. Or if you're a mortgage professional, you want to add your 2 bits, feel free to contact me directly. We could do a podcast, or I could do a blog post, or we could do a video together. Happy to get your perspective out there. Great.